Record week in the S&P. What do you make of what we saw this week in the equity markets?
Well, the week itself was a bit fascinating. Just if you listen to, your preview there. So everybody loves higher markets, and this was an incredible week, right? Shortened week, holiday week. At the same time, you had global uncertainty, which was just mentioned. Maybe there was optimism because of the fiscal deal, as your person just said, to kick the can down the road. But the fact that interest rates are higher, faster than people expected is something that you need to watch. I've never seen so many people prepare for interest rate cuts and then keep pushing out the forecast. So I guess if you're going to forecast often.
So one of the things that you are so astute at is really understanding the way the markets work. Is that the thing that's driving it right now? Is it that an anticipation of cuts from the Federal Reserve? And are the markets getting a little ahead of themselves, even though they came off a little bit this week?
So, yes, there's this expectation that the Fed itself is trying to tamper, in the sense that all the public statements this week are, hey, we're not going to cut as soon as you think. The March futures markets have really cut the probability of a cut then in half. It's highly unlikely in an election year to see the Fed cut so many times. Historically, that has just not happened.
Well, I was wondering about that historically, because you have that historical perspective. Does the Fed have to be a little concerned, particularly as we get into the year, that if they start cutting a lot, it looks like they've got their thumb on the scale of the election?
So that's going to be a problem, because every point that takes place then becomes a question of, are you favoring one candidate over the other? So if they cut, Trump's going to say, oh boy, you're just doing it to support Biden. If they don't do anything, then the Biden camp may say, well, you're doing this just to support Trump. It's a very no-win situation. But you have to look at the economic data. Someone tell me why the Fed needs to cut. Equity prices are at record highs. That's a good thing. Crude oil, given all the uncertainty in the Middle East, is still in the middle of its range. Unemployment is low. We just had a number yesterday on initial unemployment claims that was the lowest in decades. Yeah. If I'm sitting at the Fed, that's a pretty good thing. Why do I have to do something?
So what's an investor to do in that world?
Be thankful. Right? So you want to have a diversified, sort of portfolio. This is not an opportunity, I don't think, to try to buy losers. What we've seen is that what's going up has continued to go up. That often happens when you've had a strong year and you have an overthrust into the new year. Historically, the biggest turning point has been in March. And so I think we're going to see strength into that March expiration, just sort of to pick a date, and then we're going to have a better sense, because that's the same time that the next continuing resolution runs out. You happen to have what that month? Oh, the Fed meeting. So what if they come out and say, no, we're not going to cut? So right now it's pretty clear ceiling as far as the equity market goes. 6 weeks from now it might be a little different.
Equities, does that mean you're going to bonds?
Yes. I think bonds are a win-win. You're getting a good yield, and if the Fed happens to cut, then you're going to get some price appreciation. Not too often you have that double opportunity.
Does that mean you come out of cash? Because there's an awful lot of money right now out there in the money market funds.
I would. Think about it. Even if you're uncertain here, the 3-month until after the next Fed meeting is over 5%.
Yeah. And that's real money.
Yes. It compounds nicely.
Consider what we've had.